everybody, my name is Allison Ostrander and I am the Director of Risk Tolerance as well as an Options Specialist here at Simpler Trading. And today I want to talk about Eli Lilly. Now, forewarning, I do have my daughter here in the background. She's my 8-month-old. So I do have her. Hopefully she'll remain quiet for the video like she's being right now. But if you hear any baby noises, it's probably her. So let's go ahead and get started talking about the daily chart for Eli Lilly. What I like about the daily chart is the Bollinger Bands are starting to flare open. These are these blue lines that I currently have on my chart. Typically, the price likes to trade within the second deviation Bollinger Band. When we start to see them flare open like this, it means that the Bollinger Bands are anticipating that the price is going to move higher and is trying to adapt itself to keep up with it and try and keep the price still trading roughly within that second deviation Bollinger Band, but at the same time make room for it to continue to the upside. We've seen that occur back here, for example, where the Bollinger Band started to flare open and then the price was able to continue higher, still staying within the second deviation, this inside blue line within that comfort zone. The second thing I like about the daily chart are my simple moving averages, which are these yellow gold lines on my charts, are about to go into a stacked up formation. The 10 period simple, which is the short dashed line, is about to cross above the 30 period simple. Both of them remain above the 100 period simple. So once that 10 crosses the 30, this will be a stacked up bullish formation. This is usually a good sign that the trend is going to continue higher. Once again, back here, we had the 10 period simple moving average above the 30, which is this line here, and both were trading above the 100, which is the solid gold yellow line. So we're about to see that occur within probably the next few days, maybe next week. The ATR trailing stop, which are these dotted lines here on my charts, these red dots and these blue dots, just switched from resistance to support. Resistance were the red dots. The other day we broke and closed above that level, so they switched back into blue dots down here as support, and that typically is another bullish sign to look at. So we have all these bullish setups occurring on our main chart, and when we look at the bottom indicators, those are also in line with the same sentiment. We have the momentum on the Awesome Oscillator showing green bars which have recently crossed above the zero line. When you see that cross from below to above the zero line, that's usually bullish sentiment, and it has plenty of room to see the bars continue to the top of the axis. We also have a beautiful bullish signal on the compound breakout tool. These three, when they're in line, even if just 2 print, is a valid bullish signal overall, especially if the price is above its resistance levels up here. And we're seeing that that's printed the other day and has continued to remain valid. Once again, back here, we had a similar signal print, and you can see we went into a nice bullish trend afterwards. So the fact that we're above all our resistance levels up here and this is printing is a pretty good sign that the price is also intending to move higher. The last thing I like about the daily chart is we have a bullish divergent bar. This is this light blue bar here that currently printed today. Typically, when that prints, especially if you're starting to go into a bullish trend, it means you'll see some sort of higher high within the next several trading days. So when I put all of these bullish aspects together on the daily chart, this is looking like a pretty good setup. On the weekly chart, we have a similar sort of situation occurring. We're already in a stacked up formation with our simple moving averages. The ATR trailing stop, excuse you, the ATR trailing stop just switched from resistance to support. So that as well is showing some overall bullish sentiment. The Bollinger Bands as well, once again, are flaring open. So they're anticipating that the price is going to move higher to the upside and trying to make room for it. We still have tomorrow to determine whether or not this bar will print, but right now it's looking pretty solid that it's going to print as a bullish divergent bar, which once again indicates that within the next few bars we'll see some sort of higher high compared to this week, which means some sort of higher high above 167.43. Now our bottom indicators aren't as much in agreement compared to on the daily chart, but there's still some positive things here. The Awesome Oscillator, though it has pulled back, which is in line with the pullback down to support with the price. The bars themselves are still above the zero line, and the good thing about this pullback is prior to this we were at a level of exhaustion, which meant we were going to see some sort of pullback in momentum and in turn see either some pullback or consolidation with the price. We've seen that occur. We pulled back down to the 30-period simple as support, held it. We saw the pullback in momentum. So I wouldn't be surprised within the next few weeks, if we do continue the bullish trend, that the momentum as well starts to pick up with green bars once again, and we go back up towards the top of the axis to test it once more. The other thing is we had a pullback signal here in the compound breakout tool when we see the red boxes in triangle print. That in a bullish trend usually means we're going to get some sort of pullback to support. Once again, we pulled back to the 30, that satisfied itself, and this week the signal's starting to cancel out. So even though it's on a bullish signal as of yet trying to print this week, the fact that it's canceling out of our pullback signal is a very good sign. So the daily chart is looking good with a bullish setup. The weekly chart is as well. So when I pull over my option chain, there are a few different ways you could look at trading this. The first one is to go out to next week's expiration, very short term based on the daily chart, and look at some sort of long debit call vertical spread to the upside. This is an overall bullish trade idea. I'm looking at the 160, 165 strikes currently. As of right now, after market close, it's showing a 204 cost basis. We're already $1.07 in the money, so this spread holds intrinsic value, which means as long as we stay at or above this level, we're not going to be taking a full loss on this trade. Yeah, which is great. If it pulls back down, right, then we still need to be mindful of the risk here. But with the bullish sentiment that we're seeing, it looks pretty good. If we do go back up and test the highs of this week within the next week or move higher, which is at 167 level, the spread will also be completely in the money and allow for a profit. Now, because on the weekly chart, we have a bullish divergent bar, and sometimes it can take a few weeks for it to follow through. I typically give it 3 bars for that signal to work out, which on the weekly chart means that we're looking at 3 weeks for the signal to work out. You could also consider going out 3 weeks in time, right? Going out to the July 10th expiration. That's 22 days from now. And once again, you could still consider a similar strategy, something like a long debit call vertical spread. If you were to use the same strikes, the cost basis is currently 236. It costs a little bit more because we're further out in time, but it still has an excellent reward potential of 264 on the trade. If instead, maybe you want it to go with a long call, with the idea that we could really continue to the upside and you want to give yourself plenty of room for that move higher, then I would go out to at least the July monthly. That's close to 30 days out in time, so you're protected a bit more from that theta decay. And ideally, I would go with a 0.7 delta, which is around the 155 strike. That's a 970 cost basis. You're nicely in the money on this trade once again. It holds about $6.07 currently of intrinsic value. So once again, as long as we can maintain this level or move higher, you're not necessarily going to take a full loss on the trade if you were to hold it into July monthly expiration. And of course, if we get that move higher sooner, you'll be probably closing out well before July for an overall profit. The 155 strike also has a decent amount of open interest. The furthest out of the money I would probably go, if this is maybe a little bit too expensive for your account, is the 165 strike, which has a 445 cost basis, still an excellent amount of open interest. And the reason why that's the furthest out of the money I would go with a long call is because the higher high that we're looking for within the next 3 weeks, if this does end up printing tomorrow, the signal, is above 167.43. So if we get at or above 167.43, it will put this 165 strike in the money. And ideally, right, it happens within the next week or so. But if we do get above that level, that strike will be in the money and allow for an ideally a profit that way. So that's if you want to give yourself time. Certainly you could go out a little bit further than that if you wanted to. But those are a few of the different trade ideas I am looking at right now on Eli Lilly. And if you like the setup that you're seeing here and want to know more about how I find these signals and determine the strategy, as well as if you're curious about intraday trading without necessarily using a day trade rule, I do invite you to join me for my free webinar later tonight. Even if you don't make it or are able to make it, this will be a recorded session as well. Let me just bring up the link now on that. But I'm very excited to do this webinar tonight because it's introducing these signals that we are looking at on Eli Lilly today, showing you the setups that I like to look for and how I've been able to maintain on this current strategy about an 80+% win rate versus my losses, as well as introduce the idea of intraday trading without technically day trading. So for those of you with smaller accounts, it is a great way to be able to trade and at the same time not have to use those pesky day trading rules. So for those of us with smaller accounts, we're still able to grow it on those intraday moves without necessarily having to have a large account to do so. So the link for tonight's webinar, if you'd like to sign up, is simplertrading.com/recipe. I'll also make sure to put this within the description for the video. But I look forward to hopefully seeing y'all there. My daughter won't be in the background for that one, so you won't have to worry as much about the baby noises there. And if you aren't able to make it, certainly I'll be doing another free webinar next week, as well as there will be a recording of this video that you can watch on your own time. So thank you guys for joining me. Hopefully I gave you some good trading ideas depending on your account size for Eli Lilly. And we will talk to you next time. Bye.